So a captive insurance company is basically your own insurance company. And they've been around literally since the 1950s. In recent decades, they've actually become much more affordable for small to mid-sized businesses. So first of all, we have to have a client that's a business owner that has maybe anywhere from $200 to $2 million of excess working capital. So for a lot of business owners, it's not going to make sense. But for those larger businesses that are generating a lot of profit, it can be a wonderful risk mitigation, asset protection type vehicle. So basically what it is that we can set up your own insurance company. It's usually covering property and casualty type issues. But almost every business owner has certain coverages that have both a deductible and they have a ceiling or a limit to those policies. Well, you can imagine that you could go out into the marketplace and you could buy a policy to just cover your deductible. You could buy a policy that would cover excess. So if you have a $5 million E&O policy, you could go get a new policy that would cover everything from $5 million and above. There's certain policies that you may not own, business interruption, or what happens if one of your key suppliers happens. In New Orleans, unfortunately, we faced Katrina. It's a once in a century event. But if that happens, how would that disrupt your business? So what happens is you can actually, there's these third-party providers out there that will actually hire underwriters to come and figure out, what sort of policies are out there. There has to be some shared risk there with other captive owners. Usually, to give you an idea, the claims ratio is anywhere from maybe 1% to 5%. So if we have a client that commits $1 million, let's say, to put into a captive every year, typically it's going to run 1% to 5% of that amount. So we're really talking about, at most maybe $10,000 is the typical risk sharing amount that may be taken. Of course, that's not guaranteed. But there's a bunch of good things that happen. It actually helps you insure your risks. So we've got certain industries it really makes a lot of sense. So that a lot of the contractors, for example, they have bonding requirements. Well, instead of having that capital just sitting in an account or having to go pay somebody to pay for that bond, if you had the money in the captive, you could actually insure that risk. But a lot of people use it for coverages that they don't currently have. The good news is that your operating company pays the premium that's determined by the underwriters to your captive. The operating company actually can take a deduction as long as the insurance is both an ordinary and necessary business expense. And then the captive can take that premium in at up to $1.2 million. They don't pay any taxes on it currently. In 2017, January, it's actually supposed to go up, and this is per captive, up to $2.2 million that your own captive insurance company can take in and not pay any current ordinary income taxes on. Now, at some point when the business gets sold or you transfer it, you can always shut the captive down. At that point, you do a liquidating distribution of the captive, and it actually comes out at a capital gains tax rate, which is much more favorable. So basically, from a tax perspective, your company's getting these deductions currently of up to $1.2 million. The captive doesn't pay current taxes on it. It shares the risk for a year, and then you pay any claims that are associated. The money then, is basically free when you eventually wind up, shutting down the captive maybe many years later at the lower capital gains tax rate. So it's a wonderful, tax, mitigation strategy, and it's a wonderful asset protection strategy because by drawing valid, premiums out of the operating company, the monies that get paid to your captive are also protected from the claims and creditors of your operating company. So for a lot of people that have a lot of excess profit in their businesses, it's a really good strategy. And if you'd like to discuss this with us, please give us a call and we'll be happy to help you.